What if I told you that building $1 million in wealth doesn't require taking crazy risks, and you don't need to be a financial genius? In fact, with the principles in this timeless book, anyone can achieve financial freedom, stress-free. Let's uncover the secrets from the intelligent investor that have transformed countless lives, including some of the wealthiest people on the planet. Stay tuned, because what you're about to learn could change your financial future forever. Welcome to my channel. If you've ever wondered how to build wealth without constantly worrying about the ups and downs of the stock market, you're in the right place. Today, we're diving into Benjamin Graham's The Intelligent Investor, a book that Warren Buffett himself calls by far the best book on investing ever written. We'll break down the key lessons from this investing Bible in simple, actionable steps. By the end of this video, you'll understand how to invest wisely, avoid common mistakes, and build wealth in a way that feels secure and stress-free. The foundation of intelligent investing, Benjamin Graham believed that investing shouldn't feel like gambling. His philosophy boils down to this. 1. Protect your principal investment. 2. Earn a reasonable return. The first step is knowing the difference between an investor and a speculator. A speculator tries to predict short-term market movements, often relying on emotions. An intelligent investor, on the other hand, focuses on long-term value. The key is to invest in assets that are undervalued and have strong fundamentals.
Here's a simple analogy. Imagine you're buying a car. Would you buy one that's overpriced just because everyone else is hyping it up? Of course not. The same principle applies to stocks. The margin of safety. One of the most important concepts in the book is the margin of safety. This means buying investments at a price significantly below their intrinsic value. Think of it as your financial safety net. For example, if a company's stock is worth $100 based on its fundamentals, you aim to buy it at $70 or less. This way, even if the stock's value drops temporarily, your downside risk is minimized. A practical tip: look for companies with strong balance sheets, consistent earnings, and a history of weathering economic downturns. This ensures you're investing in stable, reliable businesses. Emotional discipline. One of the biggest challenges in investing is controlling your emotions. Graham warns against the two main enemies of investors: fear and greed. 1. Fear makes you sell when the market dips. 2. Greed makes you buy overpriced stocks during a bubble. The solution? Follow a disciplined approach. Graham suggests having a clear investment strategy and sticking to it, regardless of market noise. A great tool for this is dollar cost averaging, where you invest a fixed amount regularly. This way, you buy more shares when prices are low and fewer when prices are high, smoothing out your costs over time. Active versus passive investing. Graham describes two types of investors: the defensive investor and the enterprising investor. 1. The defensive investor focuses on low-risk, passive investments, such as index funds or blue-chip stocks. This approach is perfect for those who want steady growth without constant monitoring. 2. The enterprising investor is more hands-on, looking for undervalued stocks and opportunities in the market. This requires more time, research, and effort. Choose the approach that fits your personality, goals, and time commitment. If you're busy or don't want to stress over market fluctuations, passive investing might be your best bet. The power of patience. Perhaps the greatest takeaway from The Intelligent Investor is the importance of patience. Wealth isn't built overnight. Graham emphasizes that true investing success comes from playing the long game. Compounding is your best friend. By consistently reinvesting your returns, your wealth grows exponentially over time. Here's an example. If you invest $500 a month at an average annual return of 8%, you'll have over $1 million in 30 years. The earlier you start, the more powerful this becomes. So, there you have it, the stress-free path to $1 million, inspired by The Intelligent Investor. By following these principles, investing with a margin of safety, controlling your emotions, and staying patient, you can build lasting wealth without losing sleep over market swings. If you found this video helpful, don't forget to like, subscribe, and share it with someone who could use a little financial wisdom. And let us know in the comments, which of these principles will you apply first? We'd love to hear your thoughts.